Welcome to the Trading Market Technicals morning call video for Thursday, February 27th. A lot of hurry up and wait. Yet again, markets really didn't do much of anything. We did get a pretty quick, nasty reversal at the end of the day. So the markets are picking up some additional volatility. And to me, that means that the markets are ready to vacate the area. Now, I wish I could tell you which direction the markets are going to be headed. I do not know that, but we are in an uptrend, so it's very well possible that we can pop up higher first and then begin another correction. That we don't know, so we just have to monitor and wait and be very, very patient, guys, because this market is giving us a lot of red flags. I'm going to concentrate solely on the E-mini S&P for this video. It'll be a short video. Nothing has changed. A lot of our indicators are pointing for lower prices, yet there is a little bit of a mixed bag on what our indicators are saying, so I'm not going to bore you with additional details. I want to get right to the point. Lots of red flags, though. Transportation, the Dow Jones Transportation Average, very, very weak yesterday. Banks were very, very weak yesterday. That's not what you want to see. The yen, Japanese yen, actually started popping up, looking for some strength yesterday. But if you look at a daily chart right in front of you, you can see it really hasn't gone anywhere. So that's also not a good sign when the markets are actually trying to rally. And the yen, yeah, you see the yen push down a little bit, but all in all said and done, the yen is not moving, it's not going anywhere. So that's to me is a warning sign. Can you take some long stocks, short stocks? Sure. Can you short relative weakness? Absolutely. But nothing is really moving. If you're playing the higher beta names, maybe that might be another story. But right now, I'm concentrating on the general market, looking for ideas to trade. And if you see, you'll see that the market, me personally, I'm not looking to put on a lot of long positions and be short for that matter. Yeah, I do think that the markets are trying to carve a local top in place. The longer term picture is quite bullish. And I do think we see higher prices at the end of the year, but we just started the new year, so it's going to take some time. And I'm not looking to put on all of these long trades and then get caught on a nasty reversal. So patience is definitely warranted. You will be rewarded, no question about it. Let the trades come to you. Let the ideas unfold properly. Let the markets tell you what direction and where it wants to go. So right now, as you can see, that we're just stagnant here. You know, Dow Jones up 18 yesterday, Nasdaq up 4, S&P literally flat, up 4 cents, and the Russell up $7. So we're not going anywhere, and there's a reason for that. You as a trader need to pick that up and say, hey, wait a minute, let me just take a step back a little bit. Let's watch. We got a full year of trading. Remember that, okay? So I want to get right to the markets. I want to talk about the yen. I want to talk about the transportation, and I want to get into the E-mini S&P and kind of digest and see where we're looking for additional clues of where we might be headed here. Okay, now the yen, right in front of you, you can see we're not going anywhere. We haven't gone anywhere other than this. We broke this bearish symmetry. We bottomed a little bit, and then we popped up, and now we're just kind of meandering back around this area. So this to me is a warning sign, because if the markets are trying to rally and the yen is not, remember, it's all about the yen at the moment, guys. You know, whether we like it or not, it is about the yen. Now, you can look at the dollar yen, which would be correlated with what S&P does. So if the S&P goes higher, dollar yen goes higher. This is inversely correlated to what the S&P and our markets are doing. So just want to make that point. So if we go higher in the yen, the spot yen future, then equity markets will go lower, okay? And if you're looking at the dollar yen higher, S&P higher, okay? So they go in sync with one another. But if you look at this, this is telling me that that we're not moving anywhere. So that to me is a big warning sign, okay? Now if you take, let's get that out of the way. If you take the transportation sector, and we see weakness, right? We have additional weakness here, guys. We did have a nice little pop on Monday. Tuesday, Wednesday, we sold off where the markets haven't gone anywhere, but, you know, during the day, you're not seeing any movement. I mean, there's really no movement. Look what happened here. We made a little top around 10 o'clock, 10:40, and we just literally made lower lows and lower highs, and then we just dumped at the end of the day. So the price action here is horrible. I mean, literally horrible. If you look at this, look what happened. We literally opened up, we rallied to new highs, and then just sold off. So to me, this is a big concern of mine. And And if you had, and remember, when the markets do turn, they turn quickly and violently, where you will get stuck and you will be caught in your position. So that's why I'm not trying to say to go out and short. I'm not trying to tell you to go and sell your long positions that are working. I'm saying tighten up your stops, trail your stops, and I would not be adding any long positions at this moment. Okay, let's see where the market goes first. Hey, if we break higher and we have tons of volume and everything is back in order and everything's looking like we're moving higher, then sure, hey, I still will not be looking to add at these lofty levels. We're up, guys, about 13 out of 16 days. That's a lot of movement, and it's a V-shaped movement to the upside. That is unsustainable. Okay, so eventually we're going to get that sell-off, and I just don't want anybody getting caught, buying a bunch of longs at these levels. But this is a big concern of mine. Okay, so we have the yen, we have the transports here not giving it to us, at least to the upside, right? And to me, you could see that this to me would be just a nice big bear flag. All right, and here's your flagpole. So this is not, it's a bearish pattern. You could even say this could be a head and shoulders pattern. Head, left shoulder, right shoulder. So that is a concern of mine. Here's your neckline. So just a word of caution. This is our leader, so we need to follow what the leader does, right? All right, now let's go into the E-mini S&P. Here's the 5-minute chart. And I want to just let you know how, if you are not patient enough, you are getting chopped around big time. And here's yesterday's price action. We rally up. We closed at 1600, right? Closed, and right out of the gate, the market's just literally just grinded higher all night in the pre-market session. Sold off a little bit, and then as soon as we opened, boom, sold off right back up again, chopped around all afternoon, and then we sold off again into the close at the end of the day. Now, in the pre-market session, we're rallying, grinding higher all the way up on absolutely no volume. This is a big concern of mine, okay? This is why I'm saying be very careful. No need to waste equity. Take a step back and let the markets digest and do what it has to do to get back in sync with one another. Because these markets are crazy. You can see this. This is not a good environment, especially for new traders that are just looking to get started. And this is what we were dealing with 3 days. Look at this. This is Monday. Big move up right out of the gate, out of nowhere, and sold off into the end of the day. Same thing. I just want to show this to you. So this, to me, is not good volatility, okay? Not that you can't make money in it, but I'm just saying, guys, just take a little word of caution. So now, there's the 5-minute chart. Now, here's what I'm looking at, all right? As you know, I've been looking at the 1820 level, the 1838, 1840-ish level. So what I did was I said, okay, if we are going to break higher, where we're going to break. So I obviously, on a 1-hour chart, I did a fib retracement from high to low, from this little area to this local low here, all right, which is the 1817 area, which held. That was that 200 period moving average, also held that little support area. And I'm looking for the 1272 extension. So I'm looking at 1866, excuse me, to 1870. So that's really the area. If we're going to go higher, that is what I'm going to look for a short-term target. Now, yes, you can take this high all the way down to this low, and it'll get you a larger 1272 extension. You can do that as well. But right now, I'm just looking for something very local. And I'm looking at this 1866. If that target's met, then I'll take it down and I'll bring it down. I'll see where the next target would be. But right now, 1866, 1870. If we break out. Now, what I'm looking for, the first area of support would be obviously this 1838, 1840. This is going to be a big area. This now coincides nicely with the 200 period moving average, which obviously held this area. If we do break this area here, this little 1836, 1835.75, that's a 200, and then we got the 1838-ish area. If we take that area out, then look for that 1817 target. And if we're going to really need to take this area out. This low is where we're going to need to take this area out for further movement to the downside and alleviate any type of bullish pressure. Why? Well, if you look at the 1-hour chart, we have a continued uptrend here, as you can see. right? Making higher highs and higher lows. We did snap that, we broke that, but now we're back up above it. Okay, so now if you just kind of just draw your trend lines, and again, if you're not a trend line guy, fine. But if you just look at the moving averages, you can even take a look at that. You could just see where we are here. And even if I take that area, we're actually now rolling. We're starting to roll on the outside of this uptrend, okay? So this, to me, seems that we're trying to carve some sort of a local top in place, and that'd be a short-term top, all right? But remember, 1835, all right, or we got to take out the 1856. We got to take out that high. And if we take out that high, then we're looking at the 1272 extension. So the target would be 1866, 1870. Resistance would be the new local high of 1856.75. And of course, support would be 1835.75. That would be the 200 period moving average, which would be stacked right on top of the next horizontal area of support. Okay? And then that target would be the 1817. And then we'll reevaluate it if we do get below that. So write that down, guys. Those are going to be the areas for the E-mini, S&P. Those are going to be the targets for resistance, the target, and then again, of course, would be the target to the downside would be that 1817. And then we would just reevaluate our analysis when and if it ever got down there, okay? So just keep that in mind. Be very nimble. Remember one thing. Remember the cycles. We talked about this. You need to understand where we are and what the cycles are doing. Right now, we have mutual fund inflows, which probably be starting up today, tomorrow, and then usually follows into Monday and a little bit on Tuesday. We have end of the month window dressing, right? Large funds defending their positions, keeping it elevated to mark up their books going into March. So just keep that in mind. Now, can a lot of times the markets just fall out of bed or sell off regardless of mutual fund inflows? Absolutely. But we just want to be nimble enough. The markets aren't going anywhere. There's no selling to be had. And for whatever reason, every dip is being bought. So that's going to help the mutual fund inflows coming in, retail money coming in, putting money to work. So just keep that in mind, in the back of your mind, if you're looking to get short the market. Be very nimble. And as I'm talking to you, I just wanted to let you guys know we were up about 4 handles on this recording, and the market's literally just dumped right this second. Something came out of Europe, my guess. Now we're up only 50 cents, being up $4 when I first started the video, early morning in the Thursday morning, okay? So again, guys, just use a lot of caution. There's a lot of opportunity. Just let it come to you, and let this market do what it has to do to either tell us that we're headed lower for a little bit. That's great. Let's get short the market. Let's sell rallies. And if not, if the market does indeed take out that 1856.75, hey, then we'll look to buy. But right now, this week has been nothing but a chop fest. Take a step back and watch what the market does and take the best setups possible. All right? Just an admin note. Tomorrow, no morning call video. I will have a full report on Monday. Enjoy the weekend, everybody.